Welcome back, everybody, and it's time for the weekend review. And I wanted to thank each and every one of you for sticking to the trade plan this week. We had an amazing week, day after day after day. We proved it out in the post-market breakdown, and I can't wait to do it again this week. We had an incredible news day on Friday. It really shook things. We had a massive amount of red tag news. And then, of course, the Trump tariffs got shot down, which was an extreme market-changing volatility action. Talk about an intense event. How this is going to play out, I'm not really sure. But all I know is that we're going to stick to the charts. We're going to let the chart tell us what to do. So let's get into it right now. I'm going to start with VIX. We're going to go to SPX. And then, of course, we're going to get to our babe, ES. So let's do it. Taking a look at VIX right now, as you guys can see, we have still been flirting with this $20 handle. And right now, VIX is looking like it could potentially come down as the indices wants to start to push up with this geopolitical shift news and the tariffs. We had this massive untested daily level here at 2174. And like I talked, we never made a new high here. So we were expecting for this to get hit, and it never did. And we're actually continuing to come down right now. We now have resistance at 1962, which is directly above us. And then there's support at 1765. However, after they've pushed down and came back up and failed to make a new high, this 1765 area could certainly give us a reaction, but I do not expect it to hold. It is possible that we could, W out here and make certain things happen, so we don't want to completely ignore this level right now. But right now, my target is certainly the 1765, which is about $1.50 from where we're at now, which would give the indices a little relief. I'm going to go ahead into the 1 hour chart just to kind of get a little bit more granular with you guys and show you what I'm talking about here. As you can see, we made the double top up here, and we're coming down. We played this 4 hour support last week on, looks like the 18th. We had this really nice pop up, and then again played our 1962 on Friday, had a really nice pop up, and then this is the Trump tariff action, and we're starting to come down. So it really looks like, unless they hold this area here and do this number, we will more than likely come down to the 1765. And like I said, this level is untested, and this has been a massive level for us in the past, and I would certainly expect this area to get a reaction, but just please keep in mind, I'm not certain how large it could be. With the double top like this might come down and do this number and then, continue to pull down. If, in fact, all things play, to the upside for the indices. So we have some really significant spots that we're going to talk about that could be the make it or break it for us. But, looking at the difference between SPX and ES, it is a stark contrast, and I want to show you this right now. So this is the weekly time frame on SPX, and SPX truly never lost the weekly leg. So this is our weekly to the all-time high currently. And why is this? Because this is the highest close. So for me, this was really the true leg that we needed to lose. This was also the leg to the current all-time high, but this actually never made the new high from a structural standpoint. But it certainly had a solid close. We did close below this, which gave us, a little structural weakness. But as we continue to go back up, we've kind of shifted, we lost this leg, but we still held this one, which was the true leg to the high. So, the bounce makes sense. The big area that we really need to watch for is 69.39. This is the monthly and weekly level. This weekly is actually untested up there. And we would want to watch for reaction. This is going to be all the make it or break it for us. If we pop 69.39 on SPX, we continue to make a new all-time high. If they reject from here, we very well could come down quite significantly. So we're going to keep an eye on this. We have the same spot to monitor on ES as well. And I'll go ahead and show you on the daily time frame what I'm talking about. So check this out. And I talked about this multiple times. Last week, we discussed how I had conflicting information because the daily leg on ES actually had lost, but we never lost on SPX. As you can see, this was our move up here. We never closed below. And then obviously we came back down. We held this here, and then obviously we still haven't closed below this one either. So we are still currently holding this structure right now. It doesn't look the same for the ES futures. However, SPX is the true index, and so we're using this as our guide for now. But with that being said, we still have that same spot here, the 69.39. That's going to be our big above below. We have a daily at 69.45 that will be kind of like the upper range. Now, we had the daily at 69.14 that played Friday. I do have another daily at 69.26. It's like, I like this area and I like this area. This is just kind of in the middle for me. And I haven't really decided how much I love it Actually, I don't love it very much at all. But it's there, and I don't want to ignore it. For me, it would make a good long target if I was going to get long, above the 914 area. So again, the 39 is where we really need to be careful, and above that, we could make all-time highs. So going down to the 4-hour time frame, just trying to show you guys what I'm looking at here. As you can see on the 4-hour, we never lost the leg either. This was our current move to the high. They came down. They closed the support above our current leg, and we really just held. They came up, and so now we're starting to work this. For those of you guys who are in the Discord room and even watched the post-market breakdown on Thursday, I called this weekly touch at 68.3450, which was a nice pullback into the weekly. And considering they haven't lost, we ended up getting the pop that it caught me off guard with the Trump stuff. I won't lie. I actually ended up letting those tariffs play out. We took one trade on Friday, and I got the hell out of the way. So this was the sweep into the weekly here. As you can see, we found a double bottom, and we're coming up. We retested, pulled back this weekly, and we're starting to move up. So this is our massive resistance area up here. There's zero question about it. I do expect a reaction up here around 69.39. But again, if this doesn't actually just hit super hard, we could end up getting a small little pullback and something like this, and then continue our progression higher. Okay, so keep an eye on that, because right now, based on SPX, it looks like we're going up. Okay, I'll just say that right now, and there's no denying it. They shifted everything on Friday, and it's just how it is. And that was one of the reasons why I gave huge precautions on Friday. I must have said it 5 times in the trade plan. Be very careful. We have a very big red tag news day. I didn't know the Trump tariffs were going to happen, but they did. So, the warning was good regardless, and it was a market structural shifting event. And so with that being said, we have to change our bias with data. And right now we are still currently moving up, but we don't want to ignore this area right here at 69.39. So with that being said, let's go ahead and get into ES right now, and let's talk about that. As you guys know, I'm a big fan of this weekly weekly market TPO. And for me, this gives a perfect example or an idea of where we're at in value. And as you can see, we've really been balancing for quite some time in this massive range. You can see these overlapping value areas, which is the white areas. And even just looking at the past couple weeks here, the past 3 weeks, you can see on this first week back on February 1st, we had a massive range. And then the following week on February 8th, we never left that range, right? We just kind of stayed inside of it and balanced, which was a huge deal. And then, of course, this week, as you guys know, we swept these weekly lows, and they've reclaimed and came back up. We talked about last week how if they got back above this area here at 68.80, which is our major pivot that we've talked about time and time again, that they would more than likely come and fill this area in. Well, as you can see right here, they've absolutely done exactly that. We still have a little bit of room to come up to fill this in, and here's where our major resistance is going to be up here at the 69, let's call it 68 area. Actually, let me draw this up there. 69.65, excuse me. So we have this area that still needs to be filled in all the way to 69.65. And again, this is going to be our major inflection point that we're going to pay attention to. As you can see, they closed right at the highs on Friday, which was really all inside this value area here. And we have really developed and built out a super nice acceptance on the weekly time frame. And so it's pretty clear with all these massive blocks here that we will just continue to push up, or could continue to push up, as long as we hold the previous weekly value area high at 69.12. We want to target up here to 69.65. That is a given in my opinion. And again, above 69.65, you can clearly see acceptance up here will take us all the way up into this range, right around 7,000, 7,010. And this also has another inefficiency here. And let me draw that out right now for you guys, as I just noticed it. Well, this is something. We actually have a bullish imbalance all the way up to 70.84, people. 70.84. That's a massive push from here. That is another 150 points or more from exactly where we're sitting at from Friday. This is a massive inefficiency that takes us all the way up here. As you can see, that we have no value area high on this. This needs to be completed. We have it on the downside. We have a huge inefficiency on the upside. This would be my massive weekly target up here that we would be looking for. And it may not happen this week, but it more than likely will get filled at some point. So just keep an eye on that 70.84. So now let's go ahead and get into the weekly time frame, because I want to show you guys this. So as I've said many times before, the ES actually lost on the weekly time frame. And there's a lot of levels in here, guys, and I'm going to show you why this gets a little confusing. It's important that you understand the pivots, okay? Once again, we have our 69.03. We've talked about that 100 times. We also have our 6880 or 6883 as far as that's concerned. Okay. I have this midpoint pivot at 68.9650 that we're going to monitor. Okay. Now, here's the deal. I have an untested weekly at 69.4350 that is decent, right? It's not my favorite, but it's decent. And I'm going to show you why it's decent. But more than the real spot that I'm looking at is the 69.6350. If you recall, that was also the big naked point of control up there, and that was also exactly where this takes us once we fill in this inefficiency here. Takes us all the way up to 65. You see that? So now we've got some serious confluence up here. We have, that we need to keep track of. And not only that, but we have another actually thing that I want to show you. I'll just pull this over. We have a monster monthly up here as well at 69.6350. This is the level that we're going to watch. If we get a rejection, it's going to be from this level. I showed you the exact same spot on SPX. It is all in confluence there. Again, like I said, it's the 69.39 on SPX. So, this is a big, big, big spot that we have to watch. And I do honestly believe that we will get a reaction here. But again, will it kill it? I don't know. It's hard to say. Based on SPX, the answer is no. Based on ES, I don't know. It's really undecided, to be quite frank. But above 69.63, we could certainly continue our push higher, and above 77, we can go even higher. Again, the 77 I have watch. This is a biggie. It's very much tested, but it could get another reaction. And when I go into the smaller time frame, you'll see why. Okay. Now, I have all these weeklies down here that you're probably like, well, what the hell do I do with these? Well, technically speaking, they're untested, but per my process, now that we've closed back above them, and we should not be ignored. I would look for reactions to either pull into 69.03 or 96 and a push higher, and then the lower level would be the 83, okay, or 68.80, as you guys have heard me talk about for some time. There's a daily there as well. Okay, so look for a pullback and some support into these, and then obviously look for resistance up here with the main spot being the 63. I'm a little cautious on the pullback. We have every reason to believe it could hold. I'm just saying, just be cautious. As always, right? So I'll just leave it at that. Let's go ahead and go into the daily time frame, show you guys what's cooking here. I'm going to go ahead and get rid of all the other levels real fast. So this is all the daily levels that I have right now, okay? And actually this level is technically untested here. Let me go ahead and change this. Okay, so I have only a few supports left to play on the daily time frame, and then of course we have this massive level, another daily, right? 69.64. I hope this level is starting to ring a bell for you guys. I've named it about 10 different times for 10 different reasons. This is the big spot, okay? So 69.12 could certainly warrant a pullback and a pop. Other than that, from a daily perspective, we have 68.80 and then 68.52. And I know this sounds crazy, but I'm not a huge fan of this level. It is technically a level. It is right by our big weekly there, or monthly at 68.57 that we've played like 3 times this week. So I would look for 52 to play and get back above 57 before I bought that. I'm just going to keep it real with you. I'm not super excited about it. The 68.80, obviously look for this to play and get back above the weekly at 83. I'm going to go ahead and put the other overlays on just so you can see what I'm talking about here, right? So you can see, if we play 52, you get back above 57. And if you play 80, get back above 83 before you get long. And then, of course, these are the weekly levels here. If 69.12 doesn't hold, you would want to see the pullback into the weeklies around 96 or even the 03, which has been super important. The way I would play the 96 area is if this plays, we would look to get long back above 03 and then obviously continuation above 12, okay? Now, if we come up higher, we do have that 43.50 weekly. I told you I'm not really excited about it. Okay, it is a very much untested weekly level that I wouldn't ignore. Use it as a target. Okay, I don't think I would short here. I'm just going to be very frank. The area that I'm really looking at more so than anything is the 69.64. I have that monthly at 63.50. I have a daily at 63.50. I have a weekly. I have 63.50, 63.50, and 64.50. It's just a lot of reasons. Plus, we have that weekly POC up there as well, and we have the confluence coming off of the weekly TPO that takes us up here, which would basically be the massive area of resistance. I mean, look at all this selling volume right here. I mean, these are just little things that I put together over the years and figure out what to look for. This is just a lot here. Okay, so pay attention to that level when we get up there. That is your main target. And more than likely, that's your massive reaction zone as well. But with that being said, We could push above that to 64 because SPX looks like it's possible. Watch the 77, guys. Watch it. This would be, if we're going to hit, if we push above 64, this could be the sleeper level, okay? Now, I have it as tested because I truly believe it is tested, but just be careful, okay? That's all I'm saying. If 77 plays, look for it to get back below 64 before really truly initiating your real short there, because this is the big high loss level. And I'm going to show you on the 4-hour right now. But again, above 77, we're going to come all the way up to 04. 04 is very much tested, and we can make new all-time highs. And so we're just going to keep an eye on VIX, keep an eye on SPX for being our guide. But I will tell you this right now, the market loves these no tariffs for now, because that means that they have better trade. Things are cheaper, et cetera, et cetera. And so as weird as it sounds, I had to do some research on it, and apparently, the market likes it. Actually, let me just pull this over and show you what I was looking at, because I really couldn't quite figure it out myself. Let's see. Let me find this here. Hang on. So here it is. I pumped, we have Grok in our room now, and it pulls up tweets, etc. This is for any member of the trade community who's in here. And we talked about the relief rally. I basically asked, do a search and tell me the reasons the market would rally on the Trump tariffs getting stopped. And basically it says that it reduces the multinational reliance on foreign supply chains, right? So that's a good thing. It reduces price pressures, and it aids in Fed's cut outlook. So the Fed may continue to cut rates based on this news, which everybody knows that, they're always looking for lower rates. And just the fact that there's no more tariffs, and they don't have to worry about the tariff pressure. And it's one of the reasons why Jerome Powell has been very nervous to cut rates already, is because we've never experienced these tariffs in our lifetime. And so he's cautious to make any moves. Well, with the tariffs gone, now he can take that data and say, okay, I can definitely cut now, knowing that these won't be in the way, and I don't have any unexpected, data that we've never experienced before. And so that's kind of a big deal. And I thought this was interesting. Somebody replied to a trader, said, tariffs are negative for economic growth, so it makes sense to get a rally. Tariffs added to inflation, so it may give the Fed the go-ahead to cut a faster pace, which would also be positive for the market. And timed with the tech being oversold, getting a relief rally isn't surprising. So I thought it was an interesting comment there, little interesting data for us, because I figured the market would tank, and it didn't. They loved it. And so I had to do a little research and figure out what the hell is going on. So here we go. Just from a 4-hour perspective, I don't have a lot. Okay, so we're starting to get into this. We're starting to retrace this massive move down, which we called, as you guys know, we were short up here, to the tick, and we rode this bad boy down, which was money. But now they're starting to retrace this, which is this massive inefficiency. Let me show you this too, because this is important. We talked about this in the post-market breakdowns. I've talked about this in the previous weekend review. They came up here and they filled these singles on this first batch, right? And then we pulled back, as you can see, because we were down here, right? Now we've started to come back up. We had this other large section of inefficiency that needs to be cleaned up. This is a massive target for me. When I see this, I'm like, they're coming for this, right? And so 69.60 is absolutely in the cards for me. There's no reason to think that they won't get that, okay? Especially if they stay above the 69.12, what we talked about. That is not only an untested daily level, but the previous weekly value area high. They will more than likely do one of these numbers, and 69.60 should absolutely be our target, people. Zero question about it. And then again, this is my big reaction zone, okay? So this market inefficiency, along with everything else, leads me to believe that we are certainly coming to at least here, and we certainly have even more excess above that if they pop the 69.65 all the way to 69.90, and even more excess up into the 70.10 area. So we have a lot of stuff to clean up higher. We have a massive bullish imbalance, and so all signs point to more up for now. So I guess that bearish thesis that I had, Trump once again foiled my plans, but that's okay. It is what it is. We take new information and we adapt. So we have an untested 4-hour at 69.38. This is untested. Do I love it? I don't love it. I really don't. The 23 is played multiple times. As you can see, it played here and it played here. And so 23 is going to be a big above below for us. But as far as the 4-hour time frame is concerned, I don't have anything else until we get to 61.50. Okay. Now, I told you there was some other weeklies and dailies in here for you to keep in mind, but we're talking about the 4-hour right now. So above 23, let's just say, because I think 38 may get a slight reaction, but I don't think it does any damage. We've got 67. Boy, does that ring a bell? We've talked about 63. We've talked about 65. Now we're talking about 67. Let me do the overlay for you. Woo, look at that. Okay, right in the same spot. Again, calling out this level again. I mean, so much stuff here. Okay, so I'm going to hide this one more time. And then moving up here, we've got our highest untested on the 4-hour at 69.8650. That is all I got. It's untested on the 4-hour. Essentially above 65, we will see that level and then more than likely try to push for an all-time high because all this stuff is tested. We do not have to worry about this. There is some tested dailies up there that may give us some, reactions or whatever, but nothing to really lay us out. Okay, so I'll go ahead and pull this up. If you guys recall, I talked about above this 65 area, we had the weekly at 77. This is why I said if we get up here, maybe in this 86, if you want a short, wait to get back under 64. This is clearly the support that was lost. Look at this massive candle. Look at this shoulder. Look at this touch. Okay, you do not want to short underneath this level. All right, I'm going to tell you right now, you just don't want to do it. Even if you think it's going to short up here, just wait until it gets below it. Okay, please, for the love of your trading account. And again, if we go back up past 77, we have to deal with 04. I do think 04 gets a reaction. I don't think it murders it. I don't. It's been tested so many times. I think we'll get a slight reaction, and then, of course, we could push up even higher there. So that's what I got for you guys. I mean, I'm just going to leave it at that. We've talked about SPX. We've talked about VIX, and we talked ES. I mean, this is as good as it gets, guys. We've laid the plan out. We had, some market-changing information on Friday, and so, we can do with the information that we have, and that's what I got for you. So we'll see what happens on Sunday night. More than likely, we will drift higher as the market continues to digest this information and potential rate cuts sooner than when they actually thought. We'll see where we open on Monday, and that will be the true test of what we need to do. But just know where your important pivot's at. Know where your big resistance is up higher. And again, if 65 plays, it could get nasty, okay? But just also, keep in mind of our important pivots. You guys know 03 and you know 80. You know where the momentum shifts. We've talked about this all week for a couple weeks. And I appreciate you guys tuning in. And I will see you on Monday for the post-market breakdown. And together we'll conquer the markets. Cheers and have a good weekend.